What's up, guys? Another big report came out this week on February the 14th. It was the Consumer Pricing Index. What happened, Nick?
Yeah, so the good news, let's be optimistic and start with the good news,
Yes.
all right? So we've had 7 consecutive months of a decline in year-over-year inflation. So it wasn't that long ago, right? Last June, the inflation was at 9.1%. Now we're down to 6.4%.
Yes.
All right, so now some of the bad news.
Yes.
So the hard part here is we had expected a decline down to 6.2%. So we actually missed our mark. So there were a couple things that kind of caused us to have a slightly higher reading than expectation. Talk about those.
So in the core reading, there's a specific part, which is the shelter price. And month over month, shelter price went up by 0.7%. And actually, year over year, it went from 7.5% to 7.9%, which was a little confusing because...
Yeah, so, I mean, all we hear right now, right, is home prices are down, median home price, down. So if home prices are going down, how can the cost of shelter, which is a big part of that, is home prices, right, continue to go up? And the main reason of that is, again, you got to remember that these are lagging indicators. So these are taking into account previous times that's getting kind of lumped in to how they weight these averages. So if you were to actually remove shelter, right, from the overall inflation report, we would have seen a much lower number. So again, I think there's more proof that as things progress on and as we dissect a little bit deeper, we should start to see some more positive components come out as we get farther along down into this year. Now, I know there's another big economic indicator that you're paying attention to. What's that?
Yeah, so another part of the Consumer Pricing Index that came out is that retail sales actually increased by 3%, which is much bigger than the expectations. So I wanted to dig a little bit deeper into why that may be the case. And the Q4 credit card data just came out, and for the first time ever, we have $986 billion in credit card debt, and we're just south of that $1 trillion range. And why that's important is because what bond investors want to see is a slowdown in the economy. And with retail sales up and credit card debt continuing to increase, it shows me that people are fueling the economy based on a finite resource because all credit card balances have maxes. So eventually that's going to end.
Now that has to be a record.
Yes.
So I think, it's great as an economy and as a country to set records, but I don't know if the most debt we've ever had is a record that we really want to celebrate, right? So another big thing from the CPI that I'm paying attention to is the change that happened with the predictions of Fed future meetings. So let's look at this graph, and this is after the CPI. Remember, this is the Fed funds rate, so these are not current interest rates. And we are currently at the 4.5 to 4.75% range. That's right now. So in our next meeting, March 22nd, we are expecting a 25% basis point increase to 4.75 to 5%. That was already widely expected. However, we were not expected at that May meeting to jump another 25 basis points. So not only are we doing that, but now the June meeting shows another 25 basis point increase is about a 50-50. And then another thing that I'm looking at here are the differences of when are we going to start to see a decline in the Fed funds rate? Previously, it looked like we were going to see a decline in November, and now it looks like that first decrease isn't going to happen until December. Now, the only thing that I'm sure of is that these percentages will change along the way, but I think this was a big mover in the market after that CPI report and after some of the Fed talk and the Fed minutes saying that they are really, really going to be diligent about handling inflation and hiking interest rates. So Overall, we know that we have a road to lower interest rates.
Mm-hmm.
But that road was not always going to be downhill or flat and straight line, right?
Yep.
We're going to have some curves and some bumps along the way. Be patient. We're in this ride with you, and eventually we are going to get there.